On this Christmas Eve, we are watching your ag commodity trade very closely. As Christina mentioned, when you have a thin volume, sometimes anything can happen. So just be prepared. That's why we're here, to keep you abreast of the latest trading activity. Here to help navigate the thin trading volume today, we have Brian Hoops on the line, and he happens to be the president of Midwest Market Solutions in Springfield, Missouri. Brian, Merry Christmas. How are you?
Hey, good morning, Marlon. Merry Christmas to you and everyone there. Doing well. Looking at not much of a white Christmas. I kind of like that.
You do? Okay. Well, it depends on your perception there, I guess, on what you want. Let's take a look at the corn market here, just totally devoid of activity today almost. Let's take a look at our futures. Just not much going on. We're down a half cent at 388 1/4. May down a half cent, July down a half cent. So, I mean, that kind of gives you a sense of the tone there. On the soybean trade, a little bit firmer. Across the board, we have gains of about 2 cents on the first three contracts. January now up 2.5 at 936.5. In the wheat market, more strength in the wheat, and actually it's gaining some steam here, Brian. We have March Chicago wheat now 4 3/4 higher. It's at 544 1/4. Within a couple of ticks of its high of the day. Meanwhile, Kansas City on that March contract, well, look at this. It's showing a gain of 7.5 cents at 466, only one tick off of its high of the day. We're off our overnight low now by a good 7.5 cents. So a little enthusiasm kicking in there. By the way, Minneapolis March is 5.5 higher. Brian, let's talk about this wheat market here for a little bit. What are you hearing through the grapevine and your services there that may be hinting at what's driving the wheat trade today?
Yeah, there just isn't that much as way as news that's pushing markets around today. It's pretty easy to see a 4-cent gain because it just takes a little bit of buying interest to push the markets either higher or lower. There's not that many traders there. The volume is really, really low. Corn has a 2-cent trading range. So, if it just starts to move in one direction, we can see kind of those moves exaggerated just a little bit. The wheat market had been moving lower for about 6 days in a row. Now we're starting to see just a little bit of short covering, maybe some profit taking off of that move of 6 consecutive lower sessions, and that's why we're seeing a little bit of a bounce in here. But as far as fundamental news, there really just isn't anything out there that's affecting the wheat market. South Korea bought maybe a cargo of optional origin corn, but that's expected not to be from the U.S., maybe from a Black Sea region. And Egypt is tendering from some soybean oil. But as far as wheat news and other corn news, soybean news, it's all pretty quiet.
I was going to ask you, I've been hearing from numerous analysts around the country that basis levels in some areas are still really, really strong. And with the end of the year coming up here, I just wanted to ask you, is that something really worth checking into for our viewers and listeners about maybe some sort of maybe taking advantage of a basis type contract or something in the near future? Would that behoove them to take a look at that?
I think it's something that you really want to take a look at. When the basis levels are extremely tight, a lot of times they don't stay that way forever. Once we start to move some product, the basis can widen back out pretty quickly. So if you're in a position where your local basis is very tight, it's a good idea at least to take a look at making some sales. And then a lot of producers that have been doing that because of tight basis, they're coming back in, buying either futures or options as a reownership strategy. But at least while the basis is narrow and the futures market is better than what it was a year ago, there's a lot of producers taking advantage of that.
Interesting. Okay, we'll come back in a moment and we'll analyze our cattle and hog market activity at midday on Christmas Eve. We're talking with Brian Hoops, and we'll be right back. Brian Hoops is our guest on this Christmas Eve, and let's take a look at our livestock trade. We begin with our live cattle market. And on the live cattle futures in Chicago right now, we now have December trading 7 cents higher at 122.47, and that is about it. Everything else is a little lower. February live cattle down 15 at 125.53. April down 35 at 126.30. Let's check out our feeder cattle market, see if anything's moving over there. It's about the same thing. January currently down 15 at 143.38. March down just a dime at 143.63. And April only one tick lower, so extremely quiet here. Brian, have you heard anything in the way of any cash cattle market activity? I know there was some thought that maybe the Packers would want to acquire their acquired list that they wanted to build up here before we got into Christmas Day this week. It doesn't seem like they're doing that yet.
Yeah, they don't seem very interested in trying to secure anything ahead of Christmas. It probably won't happen. So we haven't seen any bids at all out of the packers. There's some asking prices established by the feedlots so far this week, 123 in the Southern Plains, 195 on a dress basis in Nebraska. But, yeah, just no bids as of yet. So there looks like the waiting game is going to happen maybe into the weekend, Friday, Saturday type trade.
So apparently we have run the course of any market impact off of that cattle on feed report from last Friday then, huh?
Yeah, I tend to think so. You know, we had dropped going into that report telling us the market had done a pretty good job of anticipating that it was going to be a negative report. And then, of course, we reacted on the opening yesterday with lower prices and tried to rally from there. But, you know, this is another market similar to the grains that just going sideways to nowhere. Trade inside day yesterday and just very narrow range in today's trade, yesterday's trade, and even into the end of the last week.
On the lean hogs, we do have some higher prices. Let's take a look at where we now stand. On the lean hog February contract, we're now 38 higher. We're at 70.63, exactly $1 off our earlier low this morning. And now the April contract is 28 higher at 77.83. So we have been chopping around on both sides of unchanged today. I guess that's not to be unexpected on a Christmas Eve type trade, huh?
Yeah, exactly. That's probably exactly what we're going to see. You know, we get into even Thursday, Friday, even though they're full trading sessions, I think we're seeing more of this holiday type mode going nowhere. Very little news that'll affect the market. A lot of people are just taking some time off in here. And then you've got next week with the New Year's Day, kind of the same thing, middle of the trading week. And so until we get past New Year's, it's going to be very quiet sessions.
So I would imagine there are a lot of orders just kind of resting around where the market is trading as we go through this holiday period, just in case something happens when everybody's gone visiting or what have you, maybe at grandma's house or something, just to kick in a bunch of orders, and that would make the market move in a real hurry. So it could be kind of exciting at moments, but maybe not. Brian, thanks so much for talking with us. I appreciate it, and all the best to you and the family. I know you're going to be traveling through the holiday here, so thank you for that. Brian Hoops of Midwest Market Solutions. He is in Springfield, Missouri at his home location. So that's the latest, Janet. Not much going on.
All right. As always, thanks for keeping us up to date nonetheless.
We're trying, yeah.